What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Abbvie. Last week the shares went down quite a bit based on news. So it's the perfect time to do a fundamental analysis and to check if Abbvie is an interesting buy opportunity right now. In this video I will give you a short version of what happened, do a fundamental analysis and show you 3 stock price targets. So make sure to watch until the end. If you're new to the channel, make sure to subscribe to get notified when I'm posting a new video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. So first of all, what happened last week? I found this article which gives a short version of what happened. Shares of drugs maker Abbvie are off by 7.8% in Wednesday afternoon's trading session following decision from the Food and Drug Administration to require a heart risk warning on the label of its arthritis treatment, Rinvoq. As part of its routine reviews of clinical trial data, the FDA announced that the Janus kinase, or JAK, inhibitors approved for use arthritis treatments in the United States are now to be sold with a label cautioning their users that such drugs raise the risk of serious heart-related events, cancer, blood clots, and even death. Abbvie's Rinvoq is one of these JAK inhibiting prescription drugs. Analysts largely said that the sell-off of Abbvie shares was vastly overdone and created an opportunity to buy the stock. Still, the warning could have impact on the future prospects of the number of major drug makers. So you can look at it 2 ways. Personally, I don't see this as a problem for the company. The company feels comfortable in the product and has said that it wouldn't change their medicine. It's only a label which they already knew about. But this is just my opinion. The stock price could be something different. I think a lot of people got scared and sold the shares based on this news. I think this is an overreaction, and this might be an interesting buy opportunity. So I will show you my fundamental analysis and give you 3 stock price targets. In this overview, we see the basic fundamentals, the free cash flow and the ROE with the 52-week low and high stock price. Abbvie has a market cap of 197 billion, with a PE ratio of 29. This is too high in my opinion. You want this PE ratio to be around 20. It also depends on how fast the company is growing, which we will find out later. Because the stock went down last week, the PE ratio went down as well. Abbvie has a gross profit margin of 65% and a profit margin of 12.4%. Both are high enough in my opinion. You want this profit margin to be at least above 10%. Last year free cash flow was 70.8 billion. The 5-year average free cash flow was at 12.2 billion. We see that they paid a 8.3 billion dividends last year. The free cash flow of 70.8 can easily support that. You want the dividends paid, of course, to be lower than the current free cash flow. Otherwise the company can't maintain this in the future. Abbvie has a return on invested capital of 14.7 and a 5-year average of 10%. You want these numbers above 10%, so they did a good job here. Abbvie is currently trading at $111 a share. They have a 52-week high of $121 a share and a low of $79 a share. Now that we know a bit more about the basic fundamentals, it's time to take a look at the more advanced fundamentals. Starting off with the revenue and profit growth over the last 5 years. Since 2016, the revenue of Abbvie is almost up 80%, so it's a big jump. In this chart we see that in 2020 they made a big jump, which is related to the ronivirus. We also see that the profit is down 22%, so this is a red X. So when your profit goes down but your revenue goes up, your profit margin will automatically go down. Over here we see that the profit margin of Abbvie went down a lot in the recent years. In 2020 it was at 10%. Currently it's at 12% as we saw before. Since 2016 Abbvie bought back shares as we see in this chart. But in 2020 they issued more shares and it increased since 2016, so this means a red X. This is related again to the ronivirus I think, and I don't worry too much about this one. I prefer a company which buy back shares so we will own more of the company in ratio. The EPS goes up if earnings are the same, and the company has less shares that needs to pay dividends to. In this chart we see the current ratio of Abbvie per quarter. When a company has more current assets than current liabilities, the current ratio will be above 1. I prefer a company where the current ratio is at 1.5. Abbvie has a current ratio of 0.91 right now. This means a red X. it does make me worry a little bit. But it's not that I wouldn't buy shares anymore because of this number. In this chart we see the free cash flow growth since 2016. It increased more than 150%, so it's a big jackpot. We already saw that the free cash flow easily can support the dividends, and in this chart we also see that the payout ratio has come down since 2016. So they did a good job there. Free cash flow is used to pay dividends, buy back shares, do acquisitions, research and development, and for paying down debt. So it's really important that this number grows enough to support all these activities. As always, I will show you my 3 stock price targets based on the free cash flow. We use a low multiple of 15 for slow growing companies, a mid multiple of 20 for average growing companies, and a high multiple of 25 for fast growing companies. With all the fundamentals we saw, I think it's fair to use a mid multiple. This means Abbvie is currently undervalued by 18% and has a fair value of $132 a share. Currently they are around $111 a share, so it's a big check. We saw that Abbvie is a company which has strong fundamentals and they know how to generate revenue and free cash flow. But I do worry a bit about the profit growth. I think when a company is going to buy back shares again, as they did before, it's a buy at current prices. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.